But if we think about where the innovation is taking place, the majority is my perspective is the majority of that innovation is taking place in the open blockchain where there isn't a lot of impediments. So to that sort of idea, I would like to ask you, what are the major impediments for wider blockchain adoption? Have you seen any major roadblocks that we need to address? I mean, I understand that there's a lot of there in early days there were a lot of confusions about these technology, which created its impediments. But looking at what the SEC has been telling us in the United States, at least, the way that their narrative has changed, looking at the former the CFTC chairman, Giancarlo, for instance, and how he sees the space, it's very reassuring to see such thought leadership that is quite accurate in describing the potential for this technology. And that is not to take away from the problems that we had in the open blockchain space with ICOs and mania and whatnot. But as you mentioned, it's a road to the creative destruction where when you see a technology just like in the internet boom of early days, you see a lot of enthusiasm, and that happened in the in very regulated markets of stocks and financial markets reacted that way. But yeah, so if is there any impediment as it stands right now to blockchain adoption globally? Do you see anything like that?
Well, I mean, I think that one of the biggest issues, and I will leave the technical considerations aside because I think also that is an issue. It's a much more energy intensive and, computationally speaking, much more intensive process on an open blockchain than it is on a permissioned blockchain. So that is also something that is a consideration for that should be put in the table because it's not negligible. But I would say that also one of the biggest issues that I see, and perhaps that's sort of an occupational bias if you have it, is that there is no legal certainty on certain issues regarding the foundational aspects of an open blockchain. So the pseudonymity created a lot of problems for some of the participants. The issue of being able to navigate the existing legislation is an important issue for many companies. So if you're to adopt a solution where you don't have legal certainty, when you don't know if you're actually transgressing existing legislation, will make it very difficult for them to put in significant capital or dedicate teams to try to go in that direction. So this is actually the line we've been trying to draw. And this is what I said, there's a nuanced approach that most legal authorities and regulators are adapting and adopting around the world, is trying to figure out the business use case by business use case, because the technology itself, it is seamless, it is global, it cannot be bounded by a jurisdictional mandate by its very nature. You can't have one regulator global that deals with it simultaneously. And you can't regulate the coder. It's almost impossible unless you go and cut down the internet. So what you could probably do is try to see what are the business use cases that come out of it. Under which jurisdiction do they fall? Is it a financial service? And that is also a challenge in blockchain. Sometimes these new services, as we had the discussion before we started this interview, a token can be many things. It can be a service, it can be an asset, it can be just a digital representation, it can be traded, or it cannot not. So the question is also, the regulator is not clear also on what he's trying to regulate. What is the underlying, organism he's trying to, he or she is trying to regulate. So it can be hybrid.
Yeah, so that's the challenge for in a regulatory point of view, in a regulatory side of things, because I think that the current regulatory frameworks are not fit to address the question of what digital tokens are in general. Because as I was telling you, that digital token that you see on the open blockchain could represent shares, it could represent fuel, as in the case of Cardano, for instance. This is something that you spend in this ecosystem in order to have access to the decentralized computation power. So in that respect, it could act, and you could use it as a currency. You could spend it if there's a business that accepts it as a form of payment. Then you could effectively, de facto, use it as a currency. And there are open markets for it, giving you the price of this asset at any time, and it's 24/7, 365 days a year. So in that respect, it's a hybrid instrument, as I was saying, and the current legislation does not have a definition of it, because the instrument itself is fast evolving, especially in the open blockchain, where I'm sure we will see an influx of new types of financial instruments that we probably never saw in the traditional world, and that makes it a little bit difficult for current legislation, the people who are adopting these legislation to have some frameworks for it, because the space is moving so fast.
Exactly.
And yes, so I mean, in that respect, it's quite, I would say it's quite challenging, but that again needs to be looked at from the point of view of innovation and stifling the innovation with regulation, and how to balance the public interest of making sure that people are protected if they invest in these digital assets, and at the same time not to stifle the innovation so that it moves from one country to another completely, and missing out on that. One of the greatest things that the United States has done in the past was opening up internet for commerce, for instance. It provided a new avenue for growth for the entire country at the time when we needed it. And I think we are getting to a point where we need growth, and that growth needs to come from somewhere, and that growth could come from the blockchain industry, especially the open blockchain industry, where the most of the innovation is taking place at the same time. And
well, I think there's a lot of what you're saying is correct, and I think in the paper we did back in 19, looking at 3 different regulatory perspectives: the U.S., the EU, and I chose Singapore because they've been very innovative early and very early on sort of fintechs, but by extension also on blockchain, and different approaches that they've taken. In the US, it seemed, and this was early on, there were too many fragmented mandates amongst different organizational branches. One which was on commodities, the other, the SEC on the equity side, and the markets, and then the AML was under a different body. So when you also have fragmented regulatory mandates, it's kind of difficult to get, from an organizational perspective, collaboration so that you have a cohesive view from a regulator. I would like to think that now I've seen a lot more positive signs from the regulatory side, always speaking, because the markets in the US always run very fast. But
yes,
the regulator in this sense was lagging behind other regulatory jurisdictions. But I've seen lately that they've taken a lot of, it's been a lot of time invested, both even at the Senate has held several, hearing committees. The House has done equally so. The industry has mobilized. There's a digital chamber of commerce. They've engaged also a lot of sort of the more, law enforcement agencies who might have specific concerns about, enforcing existing legislation, particularly vis-a-vis AML and KYC requirements and money laundering. And I think this collaboration is very encouraging, because like I said, you need to throw the capital at the innovation, and that's what the US does very well. But the regulatory in this race for standards is also going to be very important.
absolutely.
And this is something that Asia and China in particular has done in a very concerted fashion the last 4 or 5 years. They've been dedicating a lot of regulatory attention, public-private partnerships, capital, mixing big business with startups, etc. And they've really made a commitment that was very public. I mean, they announced blockchain as a strategic objective at the annual meeting of the party, and that means it's going to get done.
Yes, yes. So China is a special case in that regard. I think they are using blockchain in order to solidify, to facilitate the management of the country in that respect. The central bank issued, currencies is one of the examples of that, I think. In terms of regulatory parts of things, I think the AML and KYC we have a good way of regulating that. I think if you regulate the on ramps and off ramps, whereby you identify your users, then you might actually have a good way of weeding out the bad users in the network, but from the point of view of regulating the blockchain industry, especially the open blockchain industry as an industry as a whole, as you pointed out, the fact that it's such a fundamental technology, it falls under several different jurisdictions, and it needs a very close cooperation between all these different branches of regulatory branches of the government, especially in the United States, to come up with a unified sort of vision about what this thing is and how to regulate it. So to that end, I would like to basically ask you if it might be a kind of a redundant question, but does blockchain fundamentally change the way we conduct business?
I think, I think I already answered that, because it's my deep conviction that it does.
I guess
For the
how
reasons that I
would be my question.
explained, I think it removing a third party has so many implications for the way we do business, the way we transfer value across industries. We transfer and protect value. So there's a transactional element, there's an asset registry element, and there's a security element. So that applied cross industry, the use cases could be, exponential. So and I think to add on that, it can also re-engineer corporate governance. Considering that we've been operating since the third industrial revolution with a very linear hierarchical model, it's become more decentralized with the move into emerging markets and sort of the need for more coordination across jurisdictions with technology that has allowed sort of this decentralization. But here we're talking about complete distributed model. It's a flat model. And if you take your example, like your example, which is an open blockchain, the DAO, let's put it at the extreme level, you don't need anyone at the top. That is something that we have to grapple with from a purely corporate cultural perspective and from an organizational perspective. We're not used to function or think that way.
Yes, and that basically brings me. I know we talked about it, and I want to basically capture that conversation. We talked about this before the interview, but as I mentioned, the blockchain itself is so disruptive that it makes the idea of corporation redundant, and that is a very fundamental thing. If you think about modern economy, everything is the economic agent that provides and generates economic value is captured in a corporation. And imagine that, taking that out and distributing that value across many players on an open blockchain. That becomes a very fundamental issue, especially for countries that are centers of economic activity. How do you think, given that risk and potential, because there's a potential for grabbing that value, given the risks and the potential for the entire global economy moving in that direction, how do you think the governments around the world would respond to that? What kind of legislation need to be put in place, or what kind of steps do they need to take in order to reform themselves? Because I think we are going in that direction where we might see disappearance of companies as a whole, as an industry, as a sector, and replacing and them being replaced by a piece of code on a blockchain.
Um, yes. Okay. So this is a very deep philosophical premise that we have to analyze. So let me take it from the top, which is, okay, we don't need the firm. So in theory, yes, that's what, the intent also of Satoshi was to substitute a government entity in a time of financial chaos, right? So in a sense, whether you're a crypto anarchist or a techno libertarian, no matter what side of the spectrum you're at, we're talking about a system of governance that has no central authority. It's a seductive concept. We haven't seen yet any viable DAOs, as far as I can tell, that have sort of a critical mass to be called a global phenomenon. Whether we're moving in that direction, I would say yes, but I don't know the time span for it. Because in the meantime, what will happen is the second part of your question: what would different jurisdictions do? There is a tremendous economic growth that's been promised by this technology. There is a race to capture it. And everyone who would like to be there first would like to be the one to set the standards. So there's a race for standards, because it's also going to be the protocol over which everybody will do business. So you will capture the market if you capture the standards. If we take the birth and the evolution of the internet as a proxy of what could happen, because many people, including myself, think blockchain is probably a similar type of phenomenon in terms of its breadth, then we can expect some very intense geopolitics to come into play before we can have this sort of global commons, when there is no central authority and each economic individual participant can use a blockchain either to access the market and create a livelihood and interact with other economic participants, or even act as a citizen in a direct participative democracy, if you take the extreme form of governance.
Yeah.
I think we're far from that yet. I think we're going to see intense competition, particularly amongst economies who already have significant positioning in either in industry verticals or in the global economic scene. We've seen, for example, the race that's happening between US and China on AI. Blockchain has not yet become the object of such a race, but maybe we'll see it in the years to come. In any case, Europe is sort of positioning itself by saying we're creating a favorable regulatory environment to attract capital, although our capital markets in Europe are much shallower than those in the US or even Asia. So everybody is positioning themselves to be the point where the standards will be set, because they were the ones who are going to capture most of the economic value created by this new phenomenon.
So when you think about that, do you think that, and then we've seen that clear direction, the choice of direction by China, for instance. And I think if I were to basically say, this is my prediction about China, we are more likely to see a blockchain technology being adopted within the country. And in order for you to conduct business, you'd have to be interoperable with that blockchain, which means we are moving away from this internet architecture into a sort of islands of economic activity managed by nation states. So that's one model of moving into the future. The second model is that maybe countries that have a say and have enough economic power will pick and choose a different model, the open blockchain model. Let's say pick a pick a blockchain, or maybe 2 or 3, and then say, okay, our model is such that we will encourage growth and investment in the open blockchain, and use that as a backbone, rather than creating something on our own and then making it so to say virtual country wide sort of infrastructure. So do you think in 3 or 5 years, are we going to move in that open type of blockchain the technology direction, or are we going to basically going to be faced, or every country is going to be faced with a direction, with a decision to create their own blockchain? And by that I mean they would have to invest significant amount of capital in order to create a virtual sort of country whereby the users would be citizens, or anybody who's allowed to interact or exist in that blockchain.
Well, let me put it this way. I don't think it's either economically efficient or even feasible to create national blockchains.
Mm-hmm.
The very nature of blockchain is cross-jurisdictional, okay? And its benefits, its key attributes are beneficial to the extent that they can be global.
Just like
so
internet.
it's going like the internet. So to say that I will have a national blockchain is for me counterintuitive and counterproductive from a purely economic sense. And to put it in the context, in a supply chain, if you have your national blockchain, how is that going to work with your suppliers that are in, maybe 95 different jurisdictions? You would still need to find a convergence. So I think, just to give a short answer, I think we're going to be moving by process of iteration, by process perhaps emergence of some competing standards for a while, but eventually the economics are going to drive towards convergence, as it did. It took 25 years for the internet, but we got there. And now you have one protocol that's underlying the internet. Nobody even pays attention to it. And people build competing applications on top of it, but nobody disputes the protocol underneath.
Or ownership of it, which is,
which has an organization that kind of also houses a lot of the politics around it. But I think that's what's going to happen. So yes, my hypothesis, but also a personal conviction, is that we're going to move towards convergence because the economics need to move in that direction. You can't have global companies, which by very nature is also that of the biggest players right now, whether those are Chinese or European or American. They are global, interconnected players. So by their very nature, they have to be able to provide a multi-jurisdictional tool for their own company.
Yes.
So there's no incentive to say, I will do a US blockchain, and how are you going to operate with your affiliates?
Okay.
Or your suppliers?
Yeah, I mean, interoperability was one of the ways you could do that, but I think there's to your point, it's much easier to adopt sort of an open infrastructure that would be used by everybody. But that creates a question, right? In my mind, like, do you think we're going to go in a direction where 1 or 2 major open blockchain technologies would be picked as a backbone? Or is it going to be one winner take it all, or takes it all? Or are we going to have different sort of blockchains being adopted by different companies or different countries, and the blockchains themselves would have interoperability? At this point, I can tell you from my experience that it is very much possible for blockchains to talk to each other. There are cryptographic papers written that lay out that mechanism, and we will probably see in 2021 the emergence of these kind of inter-blockchain communication, whereby, at least on the open blockchain, for instance, you would have a one token ceasing to exist in one blockchain and then immediately appearing in the other blockchain. So interoperability will be solved. and going back to your earlier assumption about the technological impediments for blockchain adoption, we are moving from the proof of work as a concept, as a algorithm that drives these blockchain technologies. We have seen an influx of blockchain 3.0s, which are completely different in their logic and securing network, that would make these blockchains very cheap to operate. So in the case of Cardano, for instance, I've seen the statistics being shown that the entire blockchain uses the power consumption of a single family home in the United States to run. It's something that spans the globe. So that's the order of magnitude, several orders of magnitude of savings in terms of the electricity that's used. So these blockchain, these new protocols that are coming in place, and the other ones are Algorand, for instance, created by the Turing Award winner, somebody who's a prominent member in the cryptographic community, and the other one is Avalanche that I can think of, that have a completely different set of properties that make them quite usable and take away those earlier blockchain the impediments that Bitcoin, for instance, or Ethereum it's in its current form have. But yes, I mean it's a
scalability has to be affordable, right? And
yeah.
otherwise it's not going to be accomplished. So I think moving in the direction of cost efficient in terms of pure financial terms, but also energy efficient,
Yep.
is very important, considering also how we're moving in sort of very specific climate directives, climate protection directives. So all of these solutions that move towards scalability, interoperability, if not common standards, at least convergent standards, is what going to create, I think, also a certain level of certainty for innovators to be able to then go and scale business applications on top of those protocols, because this is what's going to create value, the business applications, right?
Yep, absolutely. No, this is a really interesting question. As an economist, do you think the nature of money is changing?
Good question. So I'm not a monetary economist, but I think the nature of money is changing since a while now. So considering that, digital money is the primary form of exchange in many emerging markets, for example. There are Asian countries where consumers have never been into a bank before. They've never seen a bank. And most of their transactions happen through their mobile phone. The nature of money, as we've seen it, I think, for the last couple hundred years, is changing fundamentally. We've seen initiatives in India to take cash out, make it almost a cashless economy. I think the more and this is not specific to blockchain, I think digital finance has made big inroads in sort of changing the nature of we perceive as money as a medium of exchange. And the more we create a backbone for the kind of transactions like digital ledger technologies, for those to be registered and facilitated at next to zero cost, the more I think money will become, the traditional view of money will become almost extinct.
Yes, I mean, I'm glad you're to hear your view about that, because I recently started thinking about money, and just it's so fundamental, the way that things could change, especially in the blockchain community, and whereas anything of value could be expressed as a digital token that and could have markets that you could spend your IBM shares for a coffee if you want to, because there are markets for that. There would be markets for that. So we are, I think, entering in the very early stages of period where anything and anything that you can think of and digitize could be traded 24/7, 365 days a year. And it's in terms of value creation, in terms of growth opportunities globally, I think it's probably going to be unparalleled, because my thinking is that there are a lot of pockets of economic activity that are not captured by the current financial ecosystem or infrastructure. Imagine, somebody in Southeast Asia making a trade, very minuscule trade, let's say in terms of dollar amounts, but if they were to be captured on a blockchain and replicated, and you could see that that value could be enormous, or that growth opportunity could be enormous also. But to that point, I was going to ask you, if the world goes in a direction where the open blockchain becomes a prevalent sort of medium of capturing the global economic activity, where do you think the value would accrue in that scenario?
I'm not sure I understand your question, meaning,
Let's say that the open blockchain, or two or three of them, become adopted, just the way that internet became prevalent as an open sort of architecture. In that world where most of the countries sort of use the open architecture in order to generate capture economic value, where do you think the major centers of economic activity and economic value will be? What would be the major sources of economic value there, and how would that
that's
world?
very yeah. It's very difficult for me to predict,
Uh-huh.
because that is to say, if the internet, if you were asking the question about 15 years ago, 20 years ago, um, to someone who was working on the internet, and say, well, if we have a common internet standard globally, where do you think economic value will come? Maybe you could have predicted it would be e-commerce to begin with, but would you be able to have predicted, I don't know, self-driven cars?
Google, for that matter. Yeah.
So I think, I can make sort of a hypothesis that the
Yep.
areas where they have the most concentration of innovation, as well as digital skills, because you will need the human capital to develop new models. You will have the consumers, so the demographics need to be also on your side, and you will have the capital markets to finance that innovation. Those will be the pockets where the most economic value will accrue. Whether it will be in particular industries, or there will be industries we've never even discovered yet, that I don't know. I mean, to give you an idea of the kind of strategic thinking some companies should be thinking about, in Kenya, the biggest financial intermediary is the telecoms company.
Yep. The pace, right?
So, who would have imagined that a few years back? And it's probably something that wouldn't have been possible in a developed economy, because the incumbent players were so strong, and people had sort of, anchor bias vis-a-vis traditional intermediaries. It was possible in an area where you had less of a traditional banking presence, a big need, and a technology that kind of helped the whole system leapfrog into another phase, which we haven't seen in developed economies. So it's unpredictable how the confluence of these factors will work. But I think if your digital skills are there, your demographics and consumers are there, and access to capital is there, you kind of have good ingredients to ensure that no matter which way it goes, you're going to reap some of the economic value.
Oh, that's an amazing advice, actually, on a country basis, I would say, because the regulators would have to pay attention to those kind of factors going forward.
They are, but when discussing, for example, with the European Commission, where they were, did a consultation on the kind of digital skills we're going to need, and a lot of people say, well, we need these kinds of computing skills, and we need more engineers. And I said, well, actually, we need lawyers that have taken engineering degrees.
Absolutely, or
And
at
vice
least the ones
versa,
that
we need
understand that.
engineers that understand the law. So we need a lot more multidisciplinary teams, because we need to be able to get both perspectives to work together on this. I mean, if we don't have more collaboration between what the innovator is thinking and what the regulator is thinking, and feed each other's perspective. This thing is moving so fast. We don't have the time that we used to have in the past, where the consultation would take a few months and you'd ask a lot of the companies what they thought, and you go back into your, august or not so august offices and kind of think about it. Things are moving too fast, and we need to be sort of in a design thinking, permanent prototyping phase. And regulators are not traditionally formed like that. So we need to form them more to think like innovators, and innovators to think a little bit like regulators.
I mean, I see these kind of similar challenges. I am a part of a community, a Cardano community, where I run a node, and I can see that in order to be in order for this protocol to work as designed, you need a cross section of talents. You need marketers, you need law people with law degrees, you need people who are really good programmers and system administrators in order to make sure that the nodes are running well. And there is a convergence of these people actually online that cross-pollinate each other completely on a voluntarily basis, and it just is amazing how that convergence of talents is moving the whole industry forward, because we are thinking at this point how to design the governance layer, because we have already solved, let's put it this way, we have solved scalability and interoperability problems, at least on a conceptual level, and we're building something already on top of that. But the difficult part is going to be the governance layer, where you have this blockchain technology working really seamlessly, producing a lot of transactions and scaling to whatever you need. But how do you make sure that the best interest of the blockchain is captured? And that kind of pushes us towards liquid democracy and experimenting with voting. And it's a completely fascinating new avenue for us to explore. And we are in Cardano, at least, we are basing our voting structures at least on some papers that have been written, and these are basically academic papers that have been written by specialists in this regard. And it's very interesting to see how things are moving in that regard. So we'll see how things will work out. But as you pointed out, the governance is a very challenging part of blockchain technology in general, and I would like to see that evolve and introduce some innovative forms of governance. And I would like to basically go to the last question that I had, and a quote popped up in my radar screen when I was looking for papers that mentioned your name, and one of them was the quote was by Isaac Asimov, and it says, "I discovered to my amazement that through history there had been resistance to every single technological change that had taken place on Earth. Usually, resistance came from those groups who stood to lose influence, status, money as a result of change, although they never advanced this as their reason for resisting it. It was always the good of humanity that rested upon their hearts." Isaac Asimov, a lecture delivered at New York College of Engineering, and this was in a paper published in MIT. So knowing what we know now, how do you think the blockchain space will develop from a regulatory, commercial, and financial aspects? And I know you've covered these different sort of aspects already, but to summarize, if you were to paint a picture, 3 to 5 years down the road, what do you think we will see from a regulatory, commercial, and financial aspects?
So I would say, I agree with the quote in the sense that it's intrinsic to human nature. Okay, nobody wants to be pushed out of their zone of comfort, even though they know that's where growth comes from. But it pains people to be pushed out of their zone of comfort. So I would say that it's absolutely natural and normal, particularly for incumbents with vested interests, to not want to go full speed ahead in something where they are relinquishing a given for the unknown. And it's I don't have data and I would rather not refer it. I will only allude to it, that there've been, I'm sure a lot of lobbying efforts from entire industries to try to influence even legislators and other authorities while they gain time to first gain understanding, second develop their own solutions, third roll them out. So, if you're an incumbent, you will try to protect your market share and your business. It's absolutely normal. That being said, I think that there is a lot more of a openness than we saw a few years ago. I mean, when I first started to work on blockchain, a lot of people looked at me funnily.
Yeah, I see that.
They thought I was having a midlife crisis, and all of a sudden I was becoming an anarchist. So, I think we've moved from the perception that this was sort of a crazy fringe idea of people who basically rejected any kind of authority and wanted to live in a commune, to we have something real here that is worth investing time, attention, and money to explore how it can really re-engineer things, because it really solves a problem. And it doesn't solve all the problems, because then I say we move over the hype where it was the thing to slap on in a different color to make you look sexier, to do not use it unless it really makes sense for you. So if it doesn't solve a real problem, if it doesn't actually provide what we say, this sort of the cute term of the trust mechanism in a trustless environment where you absolutely need to have some kind of a depository of trust, then probably you could do it at the current technical standards with something else cheaper. Okay, so use it when we absolutely need it to solve a real problem, and then you have to address the issues that we discussed, which are your own governance problems. Even if you're a company that absolutely believes it, a CEO that's absolutely convinced, you have to bring your organization on board. You have to convince your board of directors, and you have to convince your investors. This is the reality of a company that jumps into innovation, whether that's blockchain or another. You need to convince the markets. It's a fine game. You just don't go out making big statements. You want to be credible, so you have to invest the time. You have to align your organizational incentives, and you have to make sure that you have something to talk about that looks credible. So when you think about all that, you actually saying, okay, where do you think we're going to be in 5 or 10 years? If I knew that, I'll be investing in the stock market right now. But what I can say is we're making steps in a positive direction. I think the COVID-19 crisis has thrown us into a complete tailspin. It's exacerbated a lot of the problems that potentially blockchain could purport, allegedly, and I will leave that open for people to convince each other, to solve, particularly in supply chains. We have tremendous issues right now with some supply chains have even shut down. So the more solutions we can implement to provide trust back into the environment, to introduce efficiency on a cross-border transfers, to have safety safeguards, whether that's physical products or other things, all of these issues that blockchain could serve, we have many opportunities now to put it to good use. The paradox is that at the same time, we have not matured as much as the crisis has demanded of us. So technically, we're still not ready to go full speed on some things. And we have a lot more limited budgets to invest in these kinds of new initiatives. I mean, this is the reality of companies today. They're under a lot of pressure. Their liquidity constraints are getting bigger rather than getting lesser. And they're firing a lot of people because they cannot support their job. So, try to go to your boss or to your board of directors and ask for a big budget to launch new things. When you're firing people, it's not an easy thing. So I think we have to navigate this very difficult, turbulent phase we're going through. It's both an opportunity as well as a possibility to have a major setback. I'm hoping that it's going to be an opportunity not to at least remain to the same level of investment, because things have been committed already from 19, and I'm hoping that that's going to at least bring fruition and some results. It's an unpredictable period, so we'll see.
All right. Thank you so much, Marina, Niforos. If you
Thank
have any
you.
closing remarks, this is the time.
Thank you for having me. It's been a pleasure.
Congratulations! You've reached the end of episode 9 of Slot Leader. If you've been watching or listening to our episode and you like the type of content that we're putting together, please don't forget to subscribe, like, a comment. We really like to engage with our audience, and we like to read every comment that I get on our YouTube channel. This was your host, Umed Saidov, and I will see you next time.